new video. Today we will discuss some educational content and especially the Fibonacci tool. This is a tool that I don't use that often, but it works very well, and a lot of people use it, especially in the crypto market where a lot of retail traders are. And this tool is just so easy and so convenient, also very often very accurate, that a lot of retail traders use it. So you have a lot of different Fibonacci types or Fibonacci tools. As you can see here in TradingView, there are a lot. You have trend-based Fib time, you have Fib time, you have Gann boxes. I believe that those are also based on Fibonacci. You have the pitchforks also based on Fibonacci, which work also very well actually. But we will be discussing the Fib retracement tool, the most popular one and also the easiest one. And I'll just explain on how it works and how you can use it. So first of all, a little disclaimer. Of course, this is not a get-rich-quick scheme, and of course, it's not a guaranteed success, which nothing is, of course. So, what is it? It's just an easy tool to measure the retracement of an impulse. For example, if you have an impulse like this, so this is the impulse, this is the start of the impulse. That's a bit too big. This is the start of the impulse, and this is the end of the impulse. At some point, the impulse will slow down and it will make a retracement. Every impulse will make a retracement. It will either make a retracement, something like this, and then go further up or lower. Of course, it's also possible until it loses this low. When it loses the low of trend, then of course it's a trend reversal most often, and then it will not continue to go higher and take new highs. So how can you predict on what level the retracement will bounce? This is where Fibonacci comes into play. So we have the Fib retracement tool, and the Fib retracement tool works from left to right. So you start at the start of the impulse. This is your 1, as it is called in the Fibonacci. It's the 100% till the 0%. And if you have the same levels as I have, you can check them here. I have the normal Fibonacci retracement ratios. So everything between 0 and 1 is the retracement tool, retracement ratios, and everything above 1 is the extension. And the extension, I'll explain it later. Let's just first start with the retracement. This one you can forget. So what is the retracement tool? Like I said, this is the impulse. Then this is the 100%. This is the 0%. What does that mean? If you go from the 0%, so from the end of the impulse, and it makes a retracement all the way to 1, so to this level, it just says that the whole move, 100% of the previous impulse, has been retraced. So it's very easy actually. When you go to the 0.5, that just says 50% of the previous impulse, so 50% of this has been retraced. So like I said, it's not that hard. It's actually pretty easy. It's just easy metrics and math. If you look at it this way, it just starts at the 100%, and it ends at the 0%, and the whole retracement, if it goes to 1, it's the full retracement, and if it goes to the 50%, it's just the half of the retracement. If you don't understand this, we can also just draw the Fib a little bit easier. So let's start at $1, and then it goes till $2. Okay, so this is the Fibonacci. You can see the 0% is at $2 and the 100% is at $1. So if we have this impulse from $1 to $2, if it goes all the way back to $1, then $100% of the move has been retraced. If it goes to 1.50, that's 50% of the move. If it goes to 1.7656, that's 23.6% of the move, and so on and so on. So what is the way to use these ratios? You can't really tell if there is a specific ratio that gets hit most often. The only thing that works, and it's well known that this works very well, is the golden pocket, and you've probably heard about this quite sometimes. The golden pocket, it's between the 0.618 and the 0.66 level. So 61.8% of the move till 66% of the move. That's the level where a lot of pullbacks bounce. Yeah, so mostly in crypto. I can show this as well. If we take Fed, for example. Yeah, so let's take Fed for example, and then if we look for an impulse. So this is of course macro environment. This is the highest. This is very high time frame. We can also go even higher. Let's start with a 3-day time frame, and this is a very nice impulse to to see what retracement it had. So we start at the beginning of the impulse. I wouldn't say start here because this just looks like consolidation. So I'd say start like here where it starts to move, then go to the end of the impulse. That is the like I said, that's the last high, that's the end of the impulse. And then if you look at the golden pocket ratio, so between 0.618 and 0.666, this is the area where it bounced very hard. And if you check the percentage in growth, then you'll see it's 100%, a 100% bounce from there. So, and now let's look at the other way around, because of course you don't only have to use this in a bullish scenario and an uptrend, you can also use it in a downtrend. So if you take the high as the start of the impulse and all the way, let's go to this one. Yeah, so you're here and we go down, 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 and then we move up from here. So it's like, it happens. Then you look, what is the end of the impulse? So that's this level around 0.33. You look at that, and as you will just draw it a bit further, and as you can see, we bounce again from these 66 and 61.8 percentage level area. So as you can see, this is a very strong level that works also very often. But this is not the only way how you can use Fibs. You can use Fibs for seeing how strong a trend is. For example, if you look at a bit lower time frame, maybe it's a bit easier. If a trend is very strong, then it doesn't retrace very hard. So for example here, let's look at the trend. As you can see, again, the golden pocket, and then it bounced very hard. Then let's see what's next. Again, the golden pocket, and it bounced further. Next one. So this one, for example, went a bit lower, the 0.786. So if you know basic market structure, you know you can't lose a low. If it loses the low, it's a change of market structure most of the time. Of course, it can also be manipulation, or it can be a SFP whatsoever. But if it loses the low, it loses the market structure, as well as in a bear. So if it loses the high, it changes of structure. It changes the structure into a bullish structure. So as you can see, it still holds the high, and it goes to 7.786. So if you see that this happens, if it goes to 0.786, as you can see, it creates a level. The 2-hour time frame, the 2-hour candle did not close below the level, so it held the level, and then it moved further upward. Of course, it bounced back. As you can see, these Fib levels are very strong or very good areas of support and resistance. And that's also how you should use them. You should just use them as levels. Of course, like I said, it's not a guaranteed success. Sometimes it works better, sometimes it works worse. But in this case, it works very well. Let's see if we can get another example. Yeah, I believe. So here, for example, here you can see what is the strong downtrend. If we take this impulse, so from the high here at 52 or 53 cents till 43 cents, about that area, and then it moves up, it bounces, it retraces all the way to 38.2%, so around this area. That shows us that the impulse or the trend shows us that it is a very strong trend. So if you see a retracement till 0.236 or 0.382, then you know, okay, so this is a strong trend. And then you, of course, you have to just trade with the trend, just go down and down and down. Also the 0.5%, that's a very important level, important ratio, because it shows the equilibrium. If you have a range, for example, this is a range. Let's see, this is consolidation, this is a range. If you look at the 0.5% level or 50% level, it's often a very good level. So as you can see, this is the 50%. It is a very strong level. Here it is up above the level, here it's below the level. And it shows it's just a very strong support and a very strong resistance here. So that's actually, those are the most important levels for retracement, for the Fib retracement tool, the 0.66 and 0.618 for the golden pocket, the 0.5 for ranges and consolidations, and for a strong trend, it's often 0.236 or 0.382. So these levels are the most important. If it goes below, or if it goes to 0.786 or 0.886, that's often a level where certain kind of buyers or sellers are being lured. So if that happens, you can interpret it as sellers or buyers being lured or in a trap or whatsoever. Those are the levels how I use them for especially. So you don't have to use it, of course, in that way. Now, next is the Fib extension. How does this work? The Fib extension is the everything above the 1. Oh, that's wrong. Everything above 100%. So what is 100%? Let's, if it works. These are the ones above 1%. So 1.618, 1.272, 2.618, 4.236. Those are levels that are all above 1, and it just shows every level above 100% is a certain percentage of the impulse above the impulse. So if you use, for example, 200 or 200% is that, then it's 2 times the impulse, the size of the impulse. How can you use that? If, for example, these 0.618 levels are also very useful for the extension. That's the target that I like to make. So if we have a retracement, so this is the retracement, for example, here, this is the impulse retracement, and then the 1.618 level would be my next target if you don't know the next the PA that happened before that. So if you're on a lower time frame and you're not in price discovery, then I would advise just look at the chart, look at the previous price action. Don't go blindly off on Fibs, but just look at the previous price action. But if you're in an all-time high area, so price discovery, if we can look at that as well, then you don't know where you should take your TP, take your profits, or put your targets. You can always use, if you do it like this, so this is the full retracement, you can always use the Fib levels. So again, 1.272 would be a nice target. It went above there, but 1.618 is at this point too far. Maybe at some point. But yeah, this way you can use it. Maybe I can have an example that did work. Let's look at this one. I don't think this one is. Yeah, okay, so this one works approximately. So why I don't use the wick here? That's preference. You don't have to use the wick. It's just how your trading works. I like to use often the candle closes, or sorry, the bodies of the candles, not the wicks for the Fibs, because it shows what level is being held and what not. So at this point, you can use, for example, the body here, and then you would take the 1.618 as the Fib extension level where you would take your TP or take your profit. Okay, so I think that's it. That's a little bit about Fib retracement tool and about the Fibonacci levels, ratios. If you have any questions, just let me know. It's the first time I do it like this educational video. So if you have any recommendations as well, just let me know, and I'll try to improve it. Okay, guys, thank you very much.